Bang bang, what up? It's me again. For those new to the channel, I'm Biz, and welcome to MoneyMoves U, where I share valuable information used by the rich and powerful to build wealth. Money mastery is one of my favorite subjects, and I have a bachelor's degree in finance to prove it. Now before we get into it, please don't forget to subscribe below and like me down, cause yes, like me down. If you get any value from this video, it really helps the channel grow. We appreciate it. And remember, this content is for education and entertainment purposes only. All investing involves risk, including the possible loss of principal. Please remember when investing to always do your own research. The opinions expressed in this video are solely my own. So just want to do a quick update on Uber before the earnings call, which is on May 5th. Today is May 2nd, so we got about 3 days till that happens. Let's do a little rundown. So first headline is that Uber and Lyft drop after U.S. labor head supports classifying gig workers as employees. This was April 29th. U.S. Labor Secretary Marty Walsh says most domestic gig workers should be classified as employees and receive the associated benefits. Quote, "We're looking at it, but in a lot of cases, gig workers should be classified as employees. In some cases, they're treated respectfully, and in some cases, they're not. And I think it has to be consistent across the board." Walsh says the Labor Department will have conversations with companies that employ gig workers to ensure that workers have access to consistent pay, sick time, and health care. Last month, Uber reclassified more than 70,000 UK drivers as workers after a court order, but the UK has a middle ground worker, quote unquote, definition that sits between freelancers and full-time employees. All right, here's another one. So this one says, it's time to forget Uber stock. It's lost the innovative touch. They hitting hard with that one. All right, so they talked about the labor, the labor issues as well, and what U.S. Labor Secretary Marty Walsh said about reclassifying the gig workers as employees, which will create more costs for Uber and Lyft. So of course that's been weighing on the stock recently, but this article is actually about something more long term and more deeper to the core of the company. So it says, we aren't too concerned about the gig worker classification situation. We aren't sure how it will end, but we are sure that in whatever way it does end, gig employers like Uber, Lyft, and Fiverr will adjust. I forgot about Fiverr. They're gig. Yeah, they got gig workers too. Okay. So instead, what we are concerned about when it comes to the Uber stock is the company's lack of innovation. This company used to be the epicenter of innovation. Back in 2015 and 16, this was the company to be at. Every top software engineer grad in the country wanted to work at Uber. They had a self-driving business, they had a flying car business, and they were taking over the world. Then the visionary who laid the groundwork for all of that innovation, Travis Kalanick, was forced out of the company. He was replaced by a quote-unquote housekeeping CEO who has since emphasized near-term profitability over long-term growth. The innovation has stopped. God dang it. Uber sold its self-driving business to Aurora. Then they sold their flying car business to Joby Aviation. A bunch of talent has left to other, more innovative tech companies like Opendoor. Top software engineer grads don't even go to Uber anymore. It's a shell of its former self on the innovation pipeline. So they're tearing this company up. They're tearing up Uber. They say they no longer have the same fire, the same desire to do big things anymore. So they're not even impressed with it. Okay, here's one. Will Uber's Q1 earnings disappoint on mobility weakness? All right. Ride volumes are expected to have improved sequentially in the first quarter, thanks to increased vaccinations in the United States and relaxation in virus-induced restrictions. In March, the mobility segment crossed $30 billion in annualized gross bookings run rate, and its average daily gross bookings increased 9% month over month. This was the unit's best performance in a year. Despite this improvement, ride volumes continue to be significantly below the pre-pandemic levels. This weakness is likely to reflect in mobility gross bookings and revenues. The Zacks consensus estimate for mobility gross bookings suggests an approximate 40% decline from the year ago reported number. The same for the mobility revenues indicates a 42.2% drop from the year ago reported levels. Alright, so that's it for the bear case headlines. Let's look at the bull case headlines. Alright, here you go. Uber app now allows booking of Walgreens vaccine appointment and ride. Uber customers can now book an appointment for a COVID vaccination at Walgreens and also schedule a ride to the pharmacy at the same time through the ride-sharing app. A new vaccine option in the app will allow users to enter their zip code and then book an appointment. Users then have the option of scheduling a ride to the Walgreens in advance. This was April 28th. So I guess that was this past Wednesday, I think. Let's go. Let's see what else we got. Come on. Uber delivering at-home COVID-19 tests in over 24 U.S. cities. All right. Uber is now delivering FDA-approved at-home COVID-19 test kits in select markets through the partnership with EmpowerDX. The deliveries are currently available in more than 24 U.S. cities, including Austin, Denver, Phoenix, Seattle, and Tampa. It's clear that Uber is is finding different ways to be a help when it comes to the pandemic, as opposed to being on the outside looking in, waiting for things to go back to normal so they can make money. They're going to be involved whether we're in a pandemic or not, and they're going to find ways to give back to the community for goodwill, of course, but also become an important piece on the chessboard when it comes to the recovery effort. Okay, this is some good news. April 21st, Uber Eats expands into Germany to take on Just Eat, sending Grubhub stock lower. Uber Eats will make its German debut in Berlin in the coming weeks, taking on the market dominance of Just Eat Takeaway, who recently bought Grubhub. Uber delivery SVP Pierre Dimitri Gore-Cody tells the Financial Times that Germany is one of the fastest growing markets for the company's rideshare business and a strategically important market toward achieving the goal of achieving EBITDA profitability this year, 2021. Okay, I'm not going to go into these, but you can see that Uber gets bullish start as Nomura sees scale driving profitability. So that's good to hear. Uber partners with Marriott to award membership points for deliveries and rides. If you look over here, you can see that Needham rates it as a buy. Nomura, like I said, rates them as a buy. Evercore rates them as outperform, which is also good, just like a buy. Jefferies, a buy. Vertical Research, a buy. Morgan Stanley, overweight, which is just like outperform, which is positive. Daiwa Capital, outperformed by Deutsche Bank, by Mizuho, by, and Canaccord Genuity, by. So looks like all of the analysts on the market all agree that Uber is a buy right now. Now, if you look at Uber, look at the chart, you can see that, let's start from the 90-day window. You can look at the MACD. It's below zero, it's well below zero. All right, we're at minus 47. So you know on the 90-day chart, Uber is definitely oversold. The RSI is at 42. It's not as low as we would like it to be, which would be around 30, but 42 is still low, especially when you combine that with minus 0.47 on the MACD chart. Then when you look at the actual stock itself, the actual chart, let's zoom in. Yeah, you can see that it's more than one standard deviation below the linear regression line. This stock is a buy for at least the short term, as in like over the next 30 days. This is a good entry point. All right, so that's it for now. Make sure to give us a thumbs up, not a thumbs down. Comment below and let us know if you agree or disagree with my analysis and how you feel about the recent articles that I just read regarding Uber's future and the success of the company. I'm Biz, signing off from MoneyMoves U. 3, 2, 1, gone.